about ICICI Bank because, yes, of course, that raising of the minimum amount requirement in the saving bank account was raised to 50,000. But yet again, ICICI Bank has made some revisions over there. It wasn't supposed to impact their financials in a big way, but it wasn't a welcome move either. What's your take on ICICI Bank right now?
Morning, Srishti.
Morning.
Pleasure to be with you. Yes, this one move ruffled some feathers in the street. Customers were a little wary as to why this is happening, as also market participants were a little wary, although every bank would prefer a higher minimum balance. So to that extent, it was, from the customer side, it wasn't a welcome move but from the banking sector side, I guess it wouldn't be so unwelcome from their side. But having said that, if we keep this one aspect aside and look at the sector as a whole, if you look at the last, say, 4, maybe 5 years, you'll notice that many of the retail-oriented private sector banks, they've consolidated for the better part of this 4 or 5 year period. Stocks have gone nowhere, and that's largely because valuations were really hitting the roof. There was really no room for valuations to see an uptake. Also, on the retail lending side, there was a bit of a tepid environment. Unsecured loans, credit cards, both had issues on growth. As a result, we believe that at this time, much of the private banking space has become attractive on valuations. What used to trade at a premium to Nifty is now trading at a huge discount to Nifty. And of course, there is a little bit of a tepidness in credit growth. But as we move ahead into the year and later quarters in the year, that should pick up. So the sector looks attractive, both on valuations, as also on how the sector is poised on growth. And we do think that this is an interesting space. Some banks within this space have done well. Of course, the PSU banking space looks quite attractive on valuations as well. So this is an interesting sector to look at.
Looking interesting right now, both on the larger private side and also on the PSU front. Anshul, hi, morning. Want to get your sense on the entire Alcobev sector, given that we have numbers coming in from coming in sales, a beat on volumes, but that margin pressure that still sustains on something like a United Spirits. On this stock and overall, what is your take on Alcobev? Because we've recently seen a lot of regulatory news coming in from Maharashtra, Telangana. What are you making of this sector?
Morning. Pleasure to be with you, Snehi. So if you look at this space, clearly the opportunity on this space for the next many years is tremendous. However, in many of the stocks within the space, valuations are full. The name that you take trades at over 50 times price to earnings. Where is the room for multiple expansion in this name? Of course, one will have to see earnings uptake and by a margin for expectations to be beaten and valuations to see an uptake. But if that doesn't happen and numbers are somewhere close to street expectations, there is really no room in valuations for the stock to really see a sustained sort of up move. Of course, we know that the opportunity in the sector has to be balanced by valuations, which in this case, the balance is not so favorable in our judgment. And then, if you look at some of the other players within the space, names like Radico, etc., they've delivered robust growth. Even some of the other smaller names, which have sort of a conglomerate nature, names like Global Spirits, those have also delivered strong growth on the B2C business. So the space has significant room to grow. Valuations need to be reasonable. For that to happen, a little bit of consolidation in the names is a good thing. And I think we are going through that phase today.
Mansi, this side, good morning. Request you to stay with us because I need to understand your views on how to approach consumption even before the festive season starts. But we also have Sharad joining with us and is letting us know about the stocks which will be in focus today on the back of news flows which have come on the exchanges after the market close yesterday. Sharad, over to you.
Deepak Nitrate came out with its weak set of numbers, and this is the second straight quarter where weak numbers have been reported. Of course, the margins have also been under pressure, and interestingly, the company has lagged behind its peers in this first quarter performance. BPCL, a strong Q1 numbers coming in, and also an important trigger for the stock is that how will the LPG subsidy be played out over the entire year, and how do they start getting the receipt payments? And of course, there will be a significant up move in their EBITDA in the coming quarters as well. Our revenue jumped in 2% sequentially, but PAT numbers, that has jumped almost 90% on a sequential basis. Margins also saw an uptick of 134 basis points. Muthoot Finance, strong Q1 numbers. Interestingly, the AUM growth has been very strong, and almost 88 basis points of improvement was seen for the NIMs as well on a sequential basis. Increasing credit costs coming in for Muthoot Finance.
All those details, a lot of stocks to watch out for when it comes to the earnings. But right now, Bhavin, morning and good to be speaking with you. And firstly, help us with your take on and as they also seem to be liking the number, and even the management is sounding confident about maintaining their yield as well as growth ahead. But Pavin, firstly, how is it looking like on charts? Do you believe that the stock is ready to outperform the rest of the counters within the same sector?
Good morning. Thank you. Muthoot Finance, if you look at this particular stock, it has been consolidating in a very tight band between level of 2500 on downside to close to about 2750 on the upside. Sense is that today with the earnings, high probability that stock will be looking to test that higher band. On the downside, we believe that as long as this stock holds above level of 2500 on closing basis, the move on upside is very much possible. Breakout about 2750 ideally should see stock moving closer to 2900. Our longer term thesis also on Muthoot Finance continue to remain positive. This is one of the stock which has outperformed big time from that entire financial service basket. The trade on the structural theme as well continues to remain on the positive side for this name.
Okay, so that's the take on Muthoot Finance. Bhavin, hi, morning. Just want to get your sense on some of these stocks that we have seen buzzing, and we have seen some sector churn every day rather. But yesterday, apart from you have your pharma, metals, IT, another group of stocks is doing very well, and that's the entire fertilizer space. So Bhavin, what are you making of some of these names like FACT, RCF? Some of them are earnings candidates too. What are you making on the charts for all of these? Are they looking good, or would you say this entire pack is looking good on the charts?
Yeah, so if you look at some of these names, we have seen a very strong move earlier. The move continues to remain, on the upside. In fact, that entire fertilizer agrochemical space has seen a decent rally in near term. If we talk on particular stocks, fertilizer chemical, we believe that stock has a very good base around level of 900 on upside. Potential for the stock to move closer to level of 1100 remains likely. We continue to like the stock over a period of last 1.5 year. Some amount of correction in March, but overall strength versus rest of the pack continues to remain very strong. Second, if we look at something like RCF, the stock fails to catch the momentum on the upside. We have always seen the level of 170, 180 coming in as a strong resistance. On the downside, we believe that stock is probably looking for retest of 140, where one should look to enter the space. 140 will be very crucial level. On upside, 160, 170 band is something where participants should look to book profit.
At 160 level, and once you see that level, you can consider booking profit at particular in RCF, and also keep an eye on the fertilizer space. With the onset of monsoon, we did see the seasonality factor playing around for the fertilizer stocks, and next quarter or 4 to 5 months is the festival demand. And while we talk about the festival demand, we see the FMCG, consumption, automobile, hotel, travel, tourism, aviation, all of these pockets doing well. Do you see that's the flavor and the direction for the market next?
Yes, you're right. There are certain pockets in the consumption space, both discretionary and non-discretionary, where tailwinds are quite evident. Look at value retail. Look at the numbers of some of the value retail companies on same-store sales growth. These companies, after a really long time, as much as 4 or 5 years, are showing same-store sales growth of over 10%, in certain instances even over 20%. Look at the building material companies and what they're indicating on growth. Substantial change in tonality and what they are suggesting can be ahead of us over the next say, 3 to 9, 10 months. As also, of course, beyond that. Some of the consumer durable companies, what has the government done on giving money in the hands of the consumer, lowering taxes and in fact for people who have income under 12 lakh rupees, taxes have been brought down to zero. And that has left a lot of money in their hands. For transmission of that, it takes some time. And I think some time has passed before this gets transmitted to the consumption patterns. And we are quite confident that in the second half of this year, consumption should pick up, and particularly consumer durables look very interesting after a consolidation phase over the last 1.5, 2 years. The growth that this income will show as we move ahead in the year is likely to reflect in stock prices as well. So this is an interesting space. It has defensive dynamics, as also the patterns today look quite interesting for future growth in this space, as also in the stock prices.
All right, so that's the take coming in on the consumption space. But with this, time now to slip into a very short break. Don't go anywhere. Lots more to discuss with this whole host of experts on the show right now. Don't go anywhere. We'll be right back. Expected to do better in the upcoming quarters. That was taken very positively and surprisingly rather for the markets, and along with that some of the other metal counters were also doing well. What is that you are making of the metal pack? Is there any structural story that the investors can really play through, or it's just the global sentiment that the things might improve on the global front with respect to geopolitical tension that can actually do well for the sector?
Srishti, this is a very interesting sector actually. It is commodity, and as a result, this is very cyclical. There are times when the global commodity is weak, prices are weak, and as a result, the stock prices in India as also in global metal markets get impacted quite meaningfully. And in that context, let's look at the setup today. What we have seen over the last few years is that China has slowed down, which is the largest metal consuming as also the producing country. We have seen that there has been geopolitical tensions with the tariffs coming in. There has been a lot of uncertainty around what is going to happen on global capacity creations, etc. And all of that has reflected in stock prices in the metal sector going really nowhere for a really long time. If we look beyond the immediate and look ahead, if our belief is that tariffs were just really a negotiation, I mean, the uncertainty around tariffs was a negotiation tactic, and that tariffs will settle at some point. And US's interest is to get capacities back into the US, then it can be only one thing, and that is positive for metals. Because if capacity creation picks up, then metal requirement will pick up. There is one thing for certain, which is that defense expenditure globally, whether it is in US, EU, or even in China and India, is only going up. And requirements for metals as a result is going to pick up because of these triggers. So even a 0.5% shift in demand patterns globally will lead to metal prices seeing positive uptick going forward. And as I mentioned, stocks have done really nothing. They have not much built into expectations. So this sector, in our judgment, could be the joker in the pack and could actually give you very interesting outcomes as we move ahead into the next few quarters and years.
An interesting view you are giving on the metal sector, and metal stocks do see shine, and we'll expect some positivity and momentum to continue in the sector at present as well. But Bhavin, coming to you, what's your take on the railway counters? IRCTC did come up with its quarterly earnings and good set, I should say, on the revenues front. We did see a 4% uptick. The margins also did see a 34% from the 33% levels, and the profit did see an upsurge of around 7.5%. Not just that, Titagarh Rail also, despite not that a great set of numbers, was trading in green in the sessions previously. Order wins is another scenario when we talk about the railway stocks in particular. What's your take on the sector?
So if we look at this particular sector, we have seen some amount of profit taking at higher level. Both IRCTC, Titagarh Wagon, they are not able to move past the highs that were there on in somewhere around May 2025. That has been acting as a very strong resistance over a period of time. At the same time, I believe that March-April low still continues to remain a very strong support zone, where we have seen initial reversal for these names. Given this entire setup, our sense is that this entire sector becomes a tactical play. It's not something on a structural side of the story. We are anticipating a range trade for majority of the names that are there on the railway sector. As far as IRCTC is concerned, we believe that the broader range for the stock is between 700 on the downside to 800 on the upside. As far as this range is being held, it will be a strictly a trading kind of a stock. Keep a strict stop loss around level of 695 on the downside. At the same time, anything towards level of 790 to 800 should be looked as an opportunity to book profit. As far as Titagarh Wagon is concerned, we believe that on upside, anything towards level of 945 to 950 should be looked as a profit-taking opportunity. High probability that post last 2 days of reversal, the stock can move higher in that range. However, one thing to note for Titagarh in particular is that despite an uptick that we have observed on the volume front, delivery markup has been consistently on the lower side over past 2 trading sessions. So this is slight bit of concern for the stock in the near term.
All right, so that's the take coming in on select railway counters. But along with that, let's put the spotlight on the textile space then, because the centre has held a high-level meeting with industry leaders to assess the global trade scenario, especially in the light of recent US reciprocal tariffs, and to chart a strategy for the textile sector. The government stressed diversifying into markets like the EU, etc., which imports twice as much as the US, and leveraging India's 15 FTAs. My colleague Samir joins in with more details on this one. Samir.
Important development in the textile space. To review the global trade situation, also the higher reciprocal tariff announced by US, the Textile Minister Giriraj Singh chaired a very important meeting with the key stakeholders from the textile and the garment industry to find out the possible solutions to navigate the higher tariff, especially the tariff situation which is arising. And in the same direction, the government has now urged the exporters to look for the alternate markets where they can enhance the export basket. The government or the textile ministry has asked the textile players, the players from the apparel and the garment sectors to look for the FTAs which has already been signed by India. So as of now, there are 15 FTAs which have been signed by India, and these 15 FTAs, they have a combined import value of somewhere around $180 billion. Not just this, the government has also asked the textile exporters to focus on the European market, the EU FTA, which alone has an import potential of $268.8 billion, which is way higher than what India exports to US. So for US market, India textile export stands roughly around $179 billion. So this is the reason that government understands that even if US imposes higher tariffs, but if the government needs or the textile player needs to mitigate this higher tariff, then they need to look for the alternate or the newer market, and export diversification is one possible solution. In addition to this, the textile minister has also directed to form subcommittees to find out what could be the steps or the policy tweakings that could be undertaken for the structural reform. So the subcommittee that has been asked to form, this will look into the aspect of the diversification in the new market. Secondly, the fiscal and ease of doing business measures, what structural reform could be done. In addition to this, the enhancing cost competitiveness and the innovation. And lastly, that government target of US $100 billion export by year 2030. Government is quite confident that despite the global headwinds, the textile export will reach the target of $100 billion export by 2030, and the domestic industry will definitely play a very important role to achieve this.
All right, so that's on the textile space. Anshul, just want to get your thoughts on everything that's been happening with this space recently, given that this was one of the most affected sectors along with chemicals when we were hit with those additional 25% tariff. Give us a sense on where do you think this sector is headed now that neighboring countries are becoming more competitive in terms of their exports since they are on a lesser tariff base than us?
Actually, just competitiveness on pricing really doesn't give you the market in the long term. Of course, in the short term, there may be hiccups. Some customers I hear are canceling orders with the Indian suppliers and they are going to neighboring countries. But in the long term, it is the ability to create scale, to provide quality manpower, and to provide quality product at affordable prices consistently is what will get you business. And in that context, India is very favorably poised because we have the right dynamics as regards the sector. We are amongst the largest cotton growing countries, and really that is a natural advantage that the country has on manufacturing textiles. Also, we have relationships with many of the buyers. When I say we, I mean Indian companies. They have relationships, and these are long-term relationships where the buyers have relied on these companies to provide textile products. I see that this is a short-term sort of hiccup in the sector. In the long term, the Indian textile sector holds a lot of promise. And I think that the buying countries will have to gravitate towards India over the long term for their needs. And as a result, I remain actually positive on this sector, despite the recent volatility in stock prices as also in sectoral dynamics.
All right, so that's the take coming in on the textile space right now. But with this, let's also get you some of the mid-cap bets from our expert. And Saumil, tell us within the mid-cap basket, which is the stock that is making to your list?
There's one stock, NMDC. Yesterday it broke out of a triangle pattern, taking support at 2040 daily moving average. A great setup, momentum indicator